All right, ladies and gentlemen, thank you for joining us on the next episode of the Experiment Show podcast, where we start from scratch and build our real estate empire step by step from scratch. Now, today, I'm super excited because I have a hitter with us. I have a hitter with us today, but before we get into that, let me introduce my co-host, Mr. June Rodriguez. How are you, sir?
Doing fine, doing fine. Super excited. Finally glad to join the show and be part of this uh, item to help others kind of understand what we're going through. More
Yeah.
important, like you said, we have a heavy hitter with us. I've researched Clive so much, especially after seeing a couple other people's podcasts. So just excited to be in the presence, sharing what he's doing and learn a bunch about him, and give
Yeah.
that to our users. So
Nice. There you
great day.
go. There you go. So, without further ado, let me introduce everyone to our guest for today. Okay. Now, this individual, he's a scholar. Let me just start off by saying that he's a scholar because he has a Juris Doctorate's degree from Columbia School of Law. Let's just start there. That's number one. All right. He has spent years in corporate America, including Wall Street, and he was doing transactional. Let's see, it was transactional. He was a transactional lawyer for both banking as well as real estate, and he currently is doing commercial real estate investing in several parts of the country. Ladies and gentlemen, the man I'm referring to is Mr. Clive Davis. Welcome to the show, sir.
Yes.
Thank you. Thank you for having me. I'm listening to that bio. I'm like, who's that guy?
You know it, man. I
I
mean,
appreciate it.
of course. Now, we met a few years ago, and we kind of hit it off. I think it was an event, and you were moving, you were getting going. So let's start with your background. Can you kind of take us through that journey from corporate America into real estate?
Yeah, absolutely. So I start with everything for me starts with the family, ends with the family. So I come from humble background, humble beginnings. I was a public school kid all of my life until I got to Columbia for law school in New York. And attending law school, that got me started on this corporate track. I would ultimately become a corporate transactional lawyer. When I was heading to law school, I didn't even know what a corporate transactional lawyer was, but that's the path that I ended up on. And so, that really afforded me the opportunity to be in proximity with individuals who are doing business and competing on the very highest level. So my first role was as a transactional lawyer at a Wall Street firm, servicing the likes of Morgan Stanley, Goldman Sachs, and what have you. And then by extension, their clients, their Fortune 500, Fortune 100 companies. And so, that was a great experience. I transitioned out of that role and went in-house as an in-house attorney for Pfizer, who's in the news these days, given their vaccine discovery. But I went to Pfizer, which happened to be a couple of blocks away from the firm that I was previously working at. And then I did a number of different roles within that company. And then Pfizer actually relocated me to Atlanta to be the Southeast attorney for their Southeast regional business. And so a couple of years into that, I ended up leaving Pfizer, transitioned to another company, and joined them as their chief compliance officer and really stood up their compliance program, which was really in its early infancy. And so all in all, 20-year corporate run, which was very rewarding, very enriching personally, and afforded me a lot of opportunities. But I always had this itch that I hadn't yet scratched to be an entrepreneur. And so for me, it was what are the things, or what is the thing that is that I have interest in, that I have passion for, that would be the logical place for me to transition and pivot into. And so for me, that was real estate. I had been investing in real estate for 20 plus years, kind of passively on the side, always peripheral to what I was doing as kind of my primary day job. And, I said, okay, I've flirted with it in a small way, and now I want to transition into it in a bigger way.
So I have a question for Clive. So Clive, interesting point, because I myself happen to still be in corporate America, right? So, right, have that 9 to 5, but I'm trying to break ground into real estate, and I have a little. But can you tell me a little bit about, you said you transitioned slowly, but when did you know that this was something you were going to do full time? And how did you set yourself up for that? From that transition from, that corporate America consistent check to a more entrepreneurial type of, I have to go out and get it, and it's based on my deals and everything.
Yeah, so it's no easy transition, and it's not something you do on impulse. So you definitely have to be thinking about, how am I going to sustain myself? Because you don't just pivot and then success hits you. So you got to figure out, how do I sustain myself for that period of time? And I've now been away from corporate life for more than 3 years now. And so I had to think about, okay, what have I done in terms of reserves? What have I done in terms of savings? What have I done in terms of passive investments that will give me a little bit of cash flow to help me with some of the incidentals? So I've always been big on not having any debt unless it's collateralized debt. So real estate is the best example of that. And so the only debt that I have today is associated with real estate. So no credit card debt, no car notes. So that's been big for me, and that's something I try and instill in my kids. And so credit is good, but you got to be very conscious about the type of credit that you're accessing and for what purpose you're accessing it. So for me, just from a personal finance standpoint, I needed to be in a position where I wasn't going to need, be 3 months in and be like, how am I going to pay these bills? And so that's critical. But to answer your question, Miguel, about kind of when did I know, I don't know that there was one point in time, because I'll tell you very honestly, very early in my corporate life, I knew that wasn't something that I wanted to do for the rest of my life. And so I was always looking for a pathway that might be kind of an off-ramp to do something else that was more conducive to the lifestyle that I wanted to live. And that's all about freedom. And for me, freedom is being able to dictate your own terms, how you want to live your life without having to check in with anyone, without having to get permission from anyone. And so corporate life is good, and it has its purpose. But for my corporate journey, I wouldn't be where I am today. So I have no regrets. But at the same time, there comes a time where you say, if not now, when? And so for me, with I have 4 children. My oldest is 21, a senior in college, finishing up. At some point, you start to think about, what am I modeling for them in terms of freedom? And so I didn't want them to think that their only avenue was a corporate job, albeit high paying, but a corporate job that wasn't necessarily doing something that they were passionate about and would be doing, but for financial reasons. And so, I've been very purposeful about trying to eliminate obstacles, the primary one being school debt. So my oldest one, she'll be graduating in May, and she'll be debt free. And so she's in a better position than I was in, because when I graduated, I had debt. When I graduated law school, I had 6 figures. I had a mortgage on my back. Wow. And so that tended to dictate, what am I going to do? And so there are other things that I probably was more passionate about, but they were not going to compensate me in the way that I was ultimately compensated. So that's a long way of trying to answer your question. But I knew early on, so it was a matter of positioning myself, living within my means, because when I left corporate life, my lifestyle didn't have to change dramatically. I didn't have to, worry about, how am I going to pay this car note, or this car lease. Cars were paid off. I didn't have to worry about, how am I going to pay these credit cards. The only thing I had to focus on was my mortgage and my living incidentals. And so again, thinking from a planning standpoint, I try to position myself so that I had what I needed to sustain myself. And it's not been easy. And there's nothing easy about walking away from a lucrative situation from a compensation standpoint and taking a step back. But if you know why you're doing it and you're being purposeful, you're making one step back in order to take two steps forward.
Absolutely. Absolutely. That's a very big thing you just dropped on us there. The whole point about, number one, being purposeful, and also understanding that you need to prepare yourself when it comes to debt or your bills, right? There's this huge monkey off your back, a huge gorilla off of your back when you don't have to worry about that car payment, when you don't have to worry about too many credit card bills. Now, I know everyone can't do that from the beginning, but it's definitely a precursor to moving forward, right, with your financials. So that kind of leads me into the next question here. One of my questions was, why you jumped into real estate. Why is commercial or apartment investing sexy to you? And I think you touched upon it because you wanted to show your children the options that were out there. It isn't just corporate America. You do have these other options. Is there anything else that attracted you to apartment investing specifically?
Yeah, so the first attraction for me is or was to real estate. And so I always had a passing interest and fascination with real estate. It was very tangible. It is very tangible. And it would, for me, the model of real estate investing is somewhat of a simple model. It's not very complex. It's you're providing housing for someone, and in return, they're going to pay you a certain amount, a market rate for what you're providing to them. And so, as I said, even when I was in corporate life, and this is part of that preparation to Miguel's earlier question, my first real estate investment, my very first real estate investment was before I even started in corporate life. It was actually probably the month I got out of law school, and I ended up closing on the acquisition of a co-op that I was going to live in with my soon-to-be wife. I did that right out of school, and then I started working probably a few weeks after I closed on that. I still own that property until this day. And that property, I think I mentioned to you, Jake, that property is adjacent to the site where Amazon was going to put its HQ2, its second headquarters.
Right.
And that ran off track.
That's
but
Long Island
nonetheless,
City.
Give
Long
you a
Island
sense
City.
as to Long Island City, New
Right.
York. So the building that I bought this co-op in was the very first building on the waterfront overlooking the United Nations on the Long Island City side. Now there's a whole waterfront of buildings there, and you wouldn't recognize the place now. And obviously it had a lot of attention given Amazon's interest. So I bought that property. I lived in it for a couple years, and then when my first child came, it began to be too small, and we had to move back to Jersey, just from an affordability radius standpoint. But so that sparked my interest. I've been renting it since 2001, and so that kind of got me onto the journey of investing in real estate and seeing the passive income that can come from it. And so in 1999, I bought my first multifamily, a duplex property. Again, not necessarily buying it because I needed the income to sustain me, but thinking from an investment standpoint that real estate generally over the long term is going to appreciate in value, and whatever you're able to do in the interim is just gravy. So when you're not relying on that income because you have a job that's paying you, then you're getting passive cash flow, whatever that is, and then you're also getting the potential appreciation in value. And again, if you hold real estate long term, despite the ups and downs, you're going to be in a good place as long as you bought it properly in the first place. So,
right.
So those exposures to real estate told me that this is a good model. The very first thing I did when I left corporate life is I said, okay, I had a lot going on at the time from a personal standpoint. My mom was down in Florida. She wasn't doing well in terms of health. And so I was looking for a way to spend more time with her. And so I wasn't, and that's another drawback of corporate life, is that you're well compensated, but your life isn't necessarily your own. And so, someone could tell you, get on this plane, we need you to be here, or, we need you to be at these meetings and what have you. So I was in Brussels 3 or 4 times a year. I was in Sao Paulo, Brazil 3 or 4 times a year, Mexico City. And that's just international, not even talking about domestic travel.
Wow.
And so all of those things are a demand on your time. They pull you away from what you would ideally want to be doing with your family, immediate and otherwise. And so when I left corporate life, I now had no one to answer to other than, my wife and my children. I had no excuses to not, if my mom wasn't feeling well, or if there was something that needed to be tended to, I jumped on a plane, or I jumped in a car and I was there. And so after 20 years, this was the first time I had this freedom, and it felt good. And so what I decided to do is, let me go buy an apartment building in the community where my parents are. And so my parents are elderly. My father just turned 95 in September. He's in great health. Let me buy this apartment building. So I went down to Florida. At first, as you know, you might expect, I was searching for the property, looking at properties, touring properties, found a 5-unit property. It made sense. So I said, okay, I'm gonna jump in on this. What that enabled me to do is, one, I had to renovate units. First I had to find it, then I had to renovate units, then I had to evict a tenant, unfortunately. So all of the joys of being a landlord, I had to do. And for most of that time, I was out of state. So I was an out of state landlord, overseeing renovations, overseeing evictions and all of that. But it enabled me to spend 2 weeks out of the month for 6 or 7 months straight. I was home. I was in my parents' home, there with my mom, there with my father, and there with my sister, who was kind of the primary family member on the scene, assistant. And so ultimately, my mom passed away in July of 2017. But the 6 or 7 months before she passed, I spent more time with her than I had in the 6 or 7 years prior.
Amazing.
So, yeah, that's such an amazing story.
Move earlier, I would never have been able to do that.
Yes, that's a very big thing. I mean, you touched on a couple of points there, but that freedom point seems to be a theme, a reoccurring theme for so many people. Now, if I could just backtrack a little bit, because at this point we've established that, you've been a lawyer, you went to some of the top schools, and I know a lot of people who may look at this will say, well, of course he can do it because he's a lawyer. He can look at the contracts. He went to school for all of this stuff. I'm just, XYZ person working in a store down the block or whatever that is. Do you believe you have to be this scholarly person to get into apartment investing?
Well, I want to just expand on that, right? So I heard Clive mention on a couple of podcasts that he's always learning, right? So I know from just a little bit of studying, he's always in this, you have to have a passion for learning, and as long as you're interested, right? But it's always growing thin, and he's mentioned that, he studied the language and how he stressed people need to get into this. You need to learn the language. But Clive, yeah, super interested. I mean, just because I think you were talking about your kids. So I'm trying to get my kids into real estate at an early age, right? I want them to have a house right out of college like you did, right? Awesome way to start your life as an investor. But yeah, I mean, what do you have in terms of how do you build that education early on, and how do you go about that? How does a normal person, right, that's not a Ivy League student, get into that, and what would you recommend?
Yeah, so the first thing I'll answer both of those, and rein me in if I go astray. So I would say, to answer your question very simply, Kate, absolutely not. You do not need to have an Ivy League degree. You don't even need a college degree to ultimately be successful in real estate. And I'll tell you that my mom at one point in time owned 3 single family homes, one of which we were living in, the other 2 turned out to be investments, not because she strategically was aiming in that direction, but that's just the way it worked out. And my mom basically had an elementary school education. But what she did have is she had passion. She had kind of a get it done attitude. And she was not afraid to ask people for help or ask people for things that she lacked. And so that combination of traits enabled her to get access to things that theoretically should have been beyond her reach because of her limited formal education. But she was a hard worker. She had that attitude, and she was a go-get-it. So I recall growing up, there being times where my father would say to her, "Are you kidding? We can't do that." And she didn't know enough to know that on paper, theoretically, what she was doing, she shouldn't have been able to do with her limited resources. And so I saw that early on. So I knew, for me, in my mind, I'm an underachiever because I saw what she was able to achieve with an elementary education, doing very menial jobs, working 16 hours was a regular thing to her. So I've seen people accomplish things with and in real estate with very limited education. To Miguel's point about the education piece, I would say I made the decision that I wasn't going to do any more formal education, but yet I was transitioning into a real estate world that was very, it was foreign to me. And so it's one thing to buy a co-op or buy a duplex or even to buy a 5-unit. It's a whole nother thing to invest in or to pursue 100, 200, 300 unit building. That's a different world. And so you can't do that without education. And so for me, the education has been informal education, and it has been listening to podcasts like this. There's a wealth of podcasts. There's a wealth of information out there. Attending conferences, either in person, where you and I, as an example, Jake, you and I met at an in-person conference in Reston, VA. Attending conferences, reading books. There's so much available that no one today who has access to the internet has an excuse to say that they don't know what they need to do, or they don't know, they don't have access to information or knowledge about what it is that they want to do. And so you've got to be, I don't care what your background is. I don't care if you went to Columbia Law School. You've got to humble yourself to say that I'm entering into a new arena that has its own language. I've got to position myself to be successful in that world. And so for me, in addition to that informal education, it's about putting yourself in proximity with individuals who have the experience that you aspire to have. And so what's the network that you're putting yourself around or in? Who are the people that you're exposing yourself to? And so for me, I wanted to be someone who could go and buy large apartment buildings. And so while I know plenty of successful people, I didn't know anyone who, at least close within my network, who had gone off and done that to my knowledge. And so I sought out a mentorship group that is filled with individuals who are believers in multifamily real estate and either are investing passively in real estate, or in addition to their passive investments, are also actively investing in multifamily real estate. And so I don't care what your educational background is. If you have the drive and the interest and the desire, you can put yourself in a position where you are around people who are going to position you for success in real estate or whatever it is that you want to do.
Yes. I just want to recap 3 gems that I got out of what you just said. Okay. The first one, you referred to your mom, where she didn't know she had a limitation in terms of, purchasing, real estate. I didn't know I wasn't supposed to achieve that, right? So stop knowing your limitations. I didn't know I couldn't achieve a certain level of success. That was number one, right? Don't put limitations on yourself. Number two, you don't have to have a degree. You don't have to go back to school to become a real estate investor, right? There's so many tools and resources out there for you to utilize to learn about this stuff. You named a few: podcasts, networking events, RIA meetups, YouTube University. I call it YouTube University because you can literally learn anything on YouTube, and that can become your foundation for what you want to achieve. And the third thing you said there was your network. If you really want to achieve purchasing an apartment complex, for example, you need to surround yourself around the people who are successful at doing that. And that is the entire premise of this podcast, bringing people on the show who are in the world and they're successful at what they're doing. 3 great gems. Thank you so much for that. Now, something I see a lot in people is analysis paralysis, and going from the analysis phase over to the action phase. There's some kind of gap there. There's a bridge that needs to happen. Can you tell us, well, I know you started early, but in the case of apartment investing or commercial real estate investing, what was the gap you took to go from all the analysis and over into the action phase?
Yeah, so I had gotten heavy into listening to podcasts and attended conferences and what have you. And I had even begun investing passively in other people's deals and transactions. And so that kind of just whet my appetite even more. When I decided to pull the trigger was I left corporate life and I said, I'm flirting with this real estate idea, but the best way for me to see if I really want to do this in a bigger way is to go buy something, take action, go buy something. It doesn't have to be 100 unit. Let's start with a 5 unit. As you know, Jake, Miguel, you know, once you're at 5 units and above, you're in the world of commercial.
Correct.
So I said, let me go find a 5 unit building, which is exactly what I did. I was able to do it with my resources, and I really did it as a proof of concept. One, I didn't want to be in a position where I was kind of theoretically talking about buying commercial multifamily real estate. And so I wanted to take action. And so within weeks of me leaving corporate life, I made a connection with a realtor, and I said, this is what I want to do. And I need you to be sending me properties that look like this, that have these criteria, blah, blah, blah. And I wanted to be in a position where I could have no excuses. And that's really part of the reason that I left corporate life, is because once I left corporate life, I would no longer have the excuse that, Clive, you're working so hard, you're working 12, 14 hours a day, you don't have time to go do these other things. And so once I pulled the trigger and left, I needed to be in a position where I was doing something that justified the transition that I had just made. And so for me, I just needed to jump into it. I purchased that property as a proof of concept. I took on all of the challenges of doing that out of state, renovating units, evicting, all of that stuff that I mentioned earlier. And, you know, I just sold that property in the midst of COVID, March 31st. And that was a success for me. And I said to myself, okay, no more playing around with the small stuff. This is something that you want to do, and you want to do in a bigger way. And so for me, there's nothing like, I don't care how the size of the action, but it's critical that you take action, and it has to be meaningful action. And that's going to help you on your journey. Whatever your destination is, you got to start with the first mile. And so for me, that first mile was go buy this 5 unit, see if it's truly something that you want to do. And then if that is successful, then on to the next.
I love it. I love it. You said something there that really resonates with me. And basically, I think what you're saying is when you reach the point of your want meeting, when your want becomes great enough, that's when you're kind of forced to take that action, right? So you got to have that want. Amazing, man. I could talk to you all day
Yeah.
about this stuff. I have so many questions. Go ahead, Miguel.
I just want to point out that Jake, you and I are at this place, right, where we're both been attending the conferences and kind of going through this, right? So it's great to hear someone who's done it provide the map that we're already taking, right? So you and I are looking at bigger multifamilies, right? But I'm taking notes from Clive right here, and maybe we should dive into something, right? But Jake and I have been speaking, Clive, about just staying in action, right? Whether it's a single family at this point, but whatever we can to push into this real estate, right? Action is better than that paralysis Jason was talking about. But back to your first deal. Was it a partnership deal? Did you do it with all your own money or
Yeah, so that
that?
5 unit, I mean, like I said, I had a duplex before that, but the 5 unit being the first commercial property was something that I did with my own resources.
Okay.
Obviously, it was financed with a local bank. Um, but again, in terms of the reserves and the savings and what have you, but I will tell you that I've done real estate investments in prior years with other partners who are basically just friends, where we've gone in and we've basically, we've each chipped in a third or a quarter in order to take down a property. And so I'm not afraid of, and that's not something that's foreign to me. And that's something I would do again. You've got to figure out what are the resources that I have, and if there's a gap that needs to be filled in order to accomplish what it is I want to accomplish immediately, how do I fill that gap? And so, again, I don't care what your resources are. I don't care what your education is. In fact, I'd go a little further and say, the more education that you have, formal education, the more of an impediment that may prove to be in order for you being a successful entrepreneur.
Yes.
Wow.
Especially, my journey, Columbia Law School, corporate transactional lawyer, we're very risk averse people. And so that profile isn't necessarily conducive with being an entrepreneur. And so you've got more of a hurdle to overcome than someone who hasn't been brainwashed in that world and is passionate and hungry. And all they need in combination with that passion and hunger is education and know-how. And so that's out there. That's the easy part. It's just combining the two and deciding to be purposeful and make it happen.
I love it. I love it. I agree wholeheartedly. Now, you did say when you were going to get that first deal, or I think it was your first deal, the first person you reached out to was a real estate broker or an agent, right? Can you tell us who are the key team members you need, on speed dial to make deals happen?
So it's funny. So, and I silenced my phone, but I could see that while I'm talking to you, I had a property manager who's calling me concerning a property I'm going to offer on next week. And so when you're going after large scale multifamily, and it's a journey, and I've been on this journey, and I'm still learning, and I'm still finding my way. But you've got to have 80% of the deals that are going to come your way or that you're going to have a chance to pursue are going to come through traditional brokers. Mm-hmm. And so brokers are the gatekeeper to large scale multifamily. So although they're not necessarily on your team, they're individuals with whom you need to have cultivated a relationship so that you are within their thoughts when they have a property that may meet the needs that you've previously conveyed to them. And so they're part of what I would say is your peripheral team, because unless they open the gate, you're not going to gain access to those multifamily properties that you want. So you need the relationships with those brokers. You need the property manager. So large scale multifamily, unlike that Florida example I gave you, we don't self-manage large-scale multifamily. We hire a third-party property management company who manages the property day to day, does all of the logistics. And what we do is we asset manage. So we oversee the execution of our business plan by the property management company who's handling the day-to-day business. So you got to have a solid property manager. That property manager is going to help you assess properties. So many times when I'm going and I'm touring properties, if my property manager is available, he'll tag along with me. And he's going to have experience in the market, knowledge of the market. There have been times where my property manager said, yeah, we managed that 2 owners ago. So I'm familiar with the property. Let me give you this insight. And so property manager is going to be big. I'd be biased if I didn't, I'm a recovering lawyer, but you need a lawyer.
Yes.
In fact, you need multiple lawyers. You're going to need a lawyer who's just going to handle just the transactional paperwork, the purchase and sale agreement, the basic document to document the sale, the transition of the property. If you're going to syndicate the deal, which is something we can get into, you're going to need a securities attorney who's going to be handling all of the paperwork that enables you to go out there and solicit people to invest in your project. So you can't have one lawyer who does both of those, but it's not uncommon to have 2 separate lawyers handling those 2 separate pieces. So you're definitely going to need that. You're going to need a relationship with a good insurance broker who's going to get you excellent insurance coverage for that property. You're also going to need someone who can advise you as to what are the taxes going to be on this property after I acquire it, because you can't go based upon what they're paying today, because when you buy it, likely it's going to be at a higher value. It's going to be assessed at a higher value. And so part of your underwriting and doing your due diligence on the acquisition of the property is the taxes are this today, but what are they going to be after I buy it at this price? And if you that's not guesswork. You can't just kind of guess what the insurance premium might be or guess what the taxes might be. So you need partners who have expertise in each of those lanes who can advise you, and you're the quarterback for the deal. So I'm a quarterback. I'm not an expert in any of those areas, but I know who I need, and I know what types of expertise I need in order to make the deal happen.
That's what I'm talking about right there. If you didn't notice, I'm sitting here and I'm just writing my notes. I'm making sure I take it all in. You know what I mean? Like I said, I can talk about this all day, but another question I had for you, and this question is kind of near and dear to my heart, is especially in the commercial real estate space, I think there is a huge underrepresentation of people from the Black and Latino community. What can we do to usher in more of this information to our communities and say, listen, this is a way to up your game financially. This is a way to reach freedom. I've been thinking about this in the podcast. One of the main reasons I do this podcast is for that reason. But in your opinion, how can we help to push that agenda?
Well, I think the 2 of you are contributing to that just by hosting the podcast and disseminating it and making it available to people, because I think the first thing that people need to see, especially coming from underrepresented communities, and I talk about it all the time, and it's no mystery that the commercial real estate world, in terms of Black representation, I think we're right around 1%.
Right.
So we may make up 13% of the population, but we're around the 1%. And if you think about Black and brown people in commercial real estate, it's not that much better, even when you combine us as communities. So that means that we don't have enough examples of people who look like us, come from backgrounds like us, neighborhoods like we came from, who are being successful in this space. And so the very first thing that we can do is shine a light on and spotlight those individuals who are having that success. And this past weekend, I attended virtually the Diversity in Commercial Real Estate Conference. And so there were about, I want to say, 500 individuals in attendance, a renowned panel of panelists on that panel. And all of these individuals are playing some role or aspiring to be within commercial real estate. So I think we've got to provide a platform, and we've got to shine that light on individuals who are doing it. So one of the panelists, for example, was Don Peebles. Don Peebles, but for those who don't know, is a rock star in the commercial real estate space. He's an African-American gentleman. He actually has now started a fund. I think it's a $450 million fund to invest in minority real estate entrepreneurs. And he has, and if you look up Don Peebles, you go to his website, I think it's the Peebles Corporation is his entity. Like I said, he started this fund. He's putting money into the communities that he sees as being underrepresented in this space. And he has partners, corporate partners, who believe in the mission. So a lot of corporations today are in the aftermath of George Floyd are making promises and commitments. Yes. And so, he's tapping into those types of interests, and he's doing it himself. But if there are others who are willing to invest in those types of initiatives, that's what he's about. So Don Peebles, just as one example, was one of the individuals who was a part of that conference, aspiring mostly younger people. And I just hit 50, so I can say, someone who's in their 30s is a younger person.
Looking good, brother. Looking good.
I told you my father just turned 95 in September, and
wow,
he's in great shape. So I've got another role model to shoot for. But we've got to spotlight those individuals who are doing it. And I set up a group on Facebook, the African American Multifamily Investor Network, and it was really to be provide a forum. And we know we're all in many groups on Facebook. I'm in probably 24 multifamily related groups on Facebook, but there aren't a lot of groups that are focused on this underrepresented niche of aspiring real estate investors. So I wanted to provide a forum where I could spotlight individuals who are doing real estate, being successful, who are open to sharing their experiences, their journey with others who are just looking to get into it. So we have a diverse group of folks from all backgrounds, all professions, all of whom have some interest in real estate. And there is no silly question. There is no question that you can't ask. And there are going to be few questions that you're going to ask that there's not someone within the group either who they know the answer themselves, or someone within their network is doing that and they can go get that answer and bring it back to you. And so I think it's just, we've got to be purposeful about what is it that we want out of life. And if we're not comfortable with the status quo, I would suggest that real estate, it's not going to be for everyone, but if you've determined that real estate is something that might be right for you, there are people who are here to kind of hold your hand and help you across the line in terms of getting into a space that may be foreign to you.
So awesome to hear. And thank you again. You dropped a lot of good gems there. I was just actually talking. So first of all, I want to take 2 seconds and just on the spot, Clive, put you out there, right? I started a educational company for urban youth, right? So from Newark, New Jersey. You're from New Jersey. I'm sure you know where that's from. Yeah. But yep, definitely a big void, and it's one of those cities that's really up and coming really quick. I'm sure you've heard what's happened in Jersey City already, right? So just trying to get the community into their own neighborhoods, and the mayor's doing a great job with that. But put you on the spot here because I'm going to ask you maybe to attend virtually. But we have a city course where my company, Real Legacy New Jersey, is partnered with the city, and it's kind of teaching urban youth about real estate. So I'm going to put you on the spot and ask you to come talk to some of these young urban African American Latinx kids. And have these conversations. But I did have two questions out.
The answer is just tell me when.
Perfect.
And, New Jersey's my home state. And if there's anyone who wants to listen to me talk about real estate, especially young Black and Latino, that's sign me up.
Perfect. So I have two questions for you, and I know we're running on time here. My first question is about the group you just mentioned. So I've heard you mention this group before, but something really interesting I thought I heard you say, and I want to just make sure I understood it right. You said that you really don't allow everyone into this group, right? So, which I thought was really, really interesting, right? You said, my group is of people that have actually been successful, right? It's not a bunch of different people that I am allowing to join the group. It is people that have had success in this space. Tell me more, right? Because I see an opportunity for Latinx also, right? How do I start a group? But what I want to show is exactly that, right? I don't want like a talk space, or I do want a talk space, but I want it to be more where someone can go and say, wow, look what I can do. Look who can help me. Look at other people that have really been successful in this place. So what did you do to vet the members in terms of your group?
Yeah, so let me clarify, because you're making it sound more exclusive than it is. What I will say is that I have been purposeful about not trying to grow the size of the group for the sake of growth. So there are a lot of groups out there, and they set up the group, and their first objective is, how do I get to 1,000 members? How do I get to 3,000? How do I get to 5,000? And that was never and has never been my objective. In fact, I think the bigger you get, the less value almost, because it becomes too much noise, and everyone's got an opinion and not necessarily a well-founded opinion. And so I wanted to be serious about having individuals who have achieved some level of success. It doesn't have to be real estate success. In whatever they're doing, whatever lane they're in, they have a certain level of success and certain level of seriousness. And then, either they've had success in real estate, or they're aspiring to have success in real estate. But I don't want the people who don't necessarily want to do the work. It's just a fleeting interest. Today it's real estate, tomorrow it's Bitcoin, the day after that it's going to be something else. And so I've been purposeful about spreading the word via word of mouth. And so right now, I think we're at about 380 members. Again, if I wanted it to be 1,000 members, I could make that happen in the next couple of days. There are things that you can do to blow up your group. So we have individuals who have never invested in real estate. We have individuals who have bought large-scale multifamily, bought hotels, developed real estate, developed multifamily, developed hotels. We have people who are lending hundreds of millions of dollars at big corporate firms. So my thing was bring anyone who has a connection to multifamily or an interest to multifamily into this space, and also kind of curate the space so that I'm giving information that is especially valuable to our community. Again, if you want kind of the general group, I can name 24 groups that can give you that. And so I don't want to regurgitate what you're going to see in every other group. And so I want to, again, highlight individuals who come from our communities who are doing well. So Chris Senegal is a name that you should know, and I'd recommend you get him on your podcast. And so he's buying back the block in Houston. And so the model that he is following is one that I think is something that can be replicated across the country in communities that are being gentrified by individuals that far too often don't resemble the inhabitants of those communities, whether it be Jersey City, Newark, Trenton, Camden, wherever it is. And so that's the type of individual that I want to showcase, share articles about what he's achieving, what he's done, so that the members within the group see, oh, I come from a community like that, and Chris just bought that block and he developed it. And so that's what I've been trying to cultivate within that group. And so the admission standards aren't that rigorous if you don't have exposure. But again, I don't want it to be kind of, the 50th group that you're joining, that you're not going to be an active participant in, that you're not going to contribute to, and you're not going to take any value from it. So, I try and be conscious about that.
Man,
Wow.
I'm so hyped right now. Especially with the two names you just gave, I'm looking those up immediately. I'm definitely join. I'm put my little application in to get into, your FB group.
You and I both.
Exactly.
Yeah.
So it looks like we have, a few minutes left, and I just want to make sure. Well, first of all, Miguel, did you have another question? I'm sorry.
I did. My last question.
Go ahead.
Right. And then it's all yours, Jake. So I know that Jake and I were talking about the changes that are going to happen in multifamily space, right? So, with all the changes in the economy, we've been on a wild run, I'm going to say, in the last few years. But what we believe is that, the economy is shifting, and the strategies that people have adapted in this space are kind of going to be dated, right? So we're in this new frontier in terms of what are the new strategies, what's going to happen. So how do you yourself prepare yourself to kind of take on this new frontier, knowing that the strategies that got you here are probably going to change and won't be the strategies that bring you into the future?
Well, I think part of that answer goes back to the education. And so your education can't be, it can't be something that, it can't be a book that's on a shelf somewhere gathering dust. It's got to be daily refreshed, not even weekly. You've got to be refreshing yourself on a daily basis in terms of what's happening. And so there are very few days that go by where I'm not actively learning from some expert. So yesterday, Greg Willett with RealPage was he was part of a speaker series, and he was sharing insights on the multifamily market. He tended to focus on Texas, Atlanta, Phoenix, a couple other markets. He shared some content and data. And so Greg Willett is one of those experts within this world of multifamily that if he's not on your distribution, if you're not on his distribution, or if you're not following what he's doing and saying, then you're not staying current on what's happening, not just today, but what's likely to happen 12, 18, 24 months from now. And so again, you've got to put yourself in a position where you're around people who are thinking about those lofty things, like where might real estate be in 24 months? So I'm not doing that primary research in the way that Greg Willett is, but he and many others like him are doing that research. And so if you're not listening to their podcasts or figuring out when are they going to next be a guest on someone's speaker series or podcast or what have you, then you're doing yourself a disservice. In terms of the future and kind of planning for the future, you got to be agile. And so when I started looking for multifamily, I was probably more open to C-class assets than I am today. And part of that shift is because I want to think about a situation where my hold period may be longer than expected. And so I go into a project thinking 3 to 5 years is the typical hold period. I'm also now thinking about if I end up having to hold it for 7 to 10, what kind of deferred maintenance may I run into? And so if I'm in a older vintage property, a 70s or 80s or even 60s, and I may have to replace roofs or plumbing or other things. So because of that, I'm now thinking about, okay, skewing the properties that I'm looking for to be more C plus B properties and also to be newer. So to be, 80s, 90s, and even early 2000s, as opposed to 60s, 70s, and 80s that I was more open to earlier in my journey. And so I think that's kind of a potential grenade that's out there, is that there are a lot of owners who have gone into properties. They've rode the market up. They've seen the multifamily market rise over the last 10 years. And it's been, a rising tide, raises all ships. But what do you do when the tide goes out?
Right.
And you don't want to be naked. And so you want to have prepared for low tide or no tide. And so that has kind of shaped my acquisition criteria in not a drastic way, but in a subtle way. And so it's things like that that I try and be conscientious about. Those small tweaks that can make a world of difference. If the economy shifts in a way that is not necessarily consistent with the plan that you had. So when you're in business as an entrepreneur, you got to have a plan A, and you also have to have a plan B and C. Hope that you don't ever need plan B and C, but if you do need it, you want to have done things in preparation that are going to best position you for success. Who came into 2020 thinking about the coronavirus and COVID-19? And so 2020 has not gone according to my plan. I don't know anyone whose plans have gone according to plan. I thought I would have acquired a large multifamily. I'll tell you a quick story. On March 10th, I put in an offer on a property, submitted a letter of intent, an LOI on a property, 220 plus units here in Georgia. On March 11th, Corona was declared a global pandemic. The term sheet that I had the day before, those terms started to shift. We started hearing talk of reserves that used to be 3 months of reserves, moving to 12 months of reserves. So short story is, I ended up having to withdraw that offer a week later. We didn't know what collections were gonna look like in April and May. So everyone was in this kind of, I don't know, we'll see kind of mode. And so I had to pivot. I ended up pivoting, and that 5 unit that I told you about, I ended up selling that to an all-cash 1031 buyer. We closed on March 31st, the last day of the quarter. I had not come into 2020 saying, I'm going to sell this in the first quarter. But nonetheless, that's what I ended up doing. And so you got to be agile, you got to stay current, and you got to be willing to pivot. And so you never lose sight of the ultimate destination, but you've got to recognize that if you get to a stop sign and they say this road is closed, and you still got to get to that same destination, you got to, without GPS, you got to figure out what's my alternative route to get to the same destination. And so you got to be flexible. If you're not flexible, you're going to sit at that stop sign and wait until construction is finished. and you're not going to get to where you need to go.
Right. That's an amazing way to put it. COVID has thrown all of us for a major loop. I'm actually trying to, finish up a flip right now, and COVID, has done its thing. But I completely understand, and that's why I'm trying to just convert over to multifamily in the commercial space. And that's what I'm totally concentrating on. So is Miguel. So, Clive, I'm going to have to listen to this interview 2, 3, 4 times, man, because
definitely.
There was some gems in there. And I really encourage everyone who watches this to do the same. And I want to give you, Clive, first I want to say thank you. We really appreciate it. You're a friend to the room. And if you have any, social media handles or anything that you have coming up, share that with us. The floor is yours. And then we can just keep on pushing,
Yeah, so you can find me on LinkedIn and Facebook. I'm heavily on LinkedIn and Facebook. There are a few other Clive Davises, but if you search, you'll find me. And email address, I'll give you that. It's clive@parkroyalcapital.com. That's Clive, CLIVE, at parkroyalcapital.com. I'm very responsive to emails. I love talking about real estate, as you can probably tell. And so if you want to set up some time to talk to me, learn more about my journey, and collaborate, definitely reach out to me. And yeah.
Awesome. Awesome. Well, once again, thank you so much for imparting your wisdom on the Experiment Podcast show. It is so appreciated. And I think we are out of here.
Yeah,
Thank you
it's
so
an honor
much,
to meet
sir.
you, Clive. Thank you.
Thank you. I appreciate you both. And you hold me to that invitation, Miguel.
Absolutely. Thank
All
you.
right. All right, guys. Have a good one. Thank you. Much success.
All right.